The impact of trade wars on American service companies is going to be bigger than you think. Whether you own stocks directly in companies like Microsoft, Meta, Google, Visa, or Netflix, or you're invested in ETFs like Nasdaq or S&P 500, this affects you. When we hear about tariffs, we usually think about physical goods, cars, steel, etc. But what about digital services? Companies like Microsoft, Netflix, and Google export a ton of services. Software, cloud services, subscriptions, ads, and payment systems. For many of these companies, exports make up 50% or more of their revenue. So, are they at risk from trade wars? The short answer is yes. Donald Trump launched a global trade war, threatening a 20% tariff on European goods. He's given a 90-day pause for negotiations, but his focus has been on physical goods, not services. The US has a massive trade deficit in goods, but when it comes to services, we have a surplus of nearly $300 billion. The world might not buy as many American cars, but they sure love Netflix, Microsoft Office, and Google Ads. Europe isn't taking this lightly. Ursula von der Leyen, president of the European Commission, has made it clear, if negotiations fail, Europe will retaliate. They're talking about a digital tax on ad revenues, targeting Google and Meta. There's even talk of a broader tool, the anti-coercion instrument, which could block U.S. companies from public contracts or freeze investments. Even without tariffs, Europe can make life difficult for U.S. tech giants. They can impose technical standards, like mandating USB-C. They can set quotas, offer subsidies, or enforce strict data protection and content moderation rules. All of these can disrupt the operations of companies like Meta and Google. So, what does this mean for us investors? First, services are no longer safe from trade disputes. Europe has tools to target companies like Google and Microsoft directly. The downside is that we might see volatility in these stocks. The upside? This pressure could force negotiations and deals, which the market prefers over uncertainty. How do you think these trade tensions will play out? Do you see opportunities or threats for your investments? Share your thoughts in the comments below.